Hello and good morning everybody. You're with Martin Panif, Chief Account Executive and Trading Analyst, GDMFX. Welcome to today's European market outlook. As usual, we're going to start with the US markets. Basically, both the industrial Dow Jones and the NASDAQ are still keeping the positive uptrends over the better than expected data which came out in yesterday's calendar. The dollar has gained strength over its major rivals, where the JPY and the Kiwi took the major hits. The yen dropped to a 7-year low against the dollar after Japan's Prime Minister, Mr. Abe, called an early election and suspended a planned sales tax increase. A weak milk auction in New Zealand weighted on the Kiwi and dragged the New Zealand dollar versus the dollar about 30 pips down. We are expecting the FOMC meeting minutes to go out in public and additional property market data, including the building permits, housing starts, and the mortgage applications for the month of October. Moving along to Euro markets, basically the German DAX and the French CAC 40 were in positive correction over the last 2 trading days. And the move managed to cover the previous week declines. The DAX did almost 200 points and French index added another 55 pips to their trends yesterday. The current account released by European Central Bank is a net flow of current transactions, including goods and services and also interest payments. Into and also out of the European zone, which is what is the major event in the calendar today. The UK markets, looking at the FTSE 100 index, which managed to add some 55 pips, which was about 0.6% on yesterday's session, to over 6,700 level. We will be closely watching the meeting minutes, which are going to be published today. Despite the positive data on the inflation growth in Britain, the pound continued to decline against the dollar yesterday, closing with 5th consecutive daily drop after investors massively turned bearish on the pound upon the inflation report from last week, revised growth forecast. The inflation growth, despite growing, is still far below the 2% target. The Bank of England has set and investors are pushing back to their expectations on an interest hike till late 2015, which is adding pressure to the pound as well. The pound depreciated 2.2% last week, making it the worst performer in 10 developed nation currencies on a weekly trend. Hedge funds and other large investors turned bearish on the pound after acting optimistic in the first half of the year. The last time this happened, the sterling tumbled to $1.49 per pound. Experts and investors are turning bearish on the pound in the long run, as political instability will play a more increasing role as we enter 2015 and we near the general elections in May. An example of the way political instability impacts the pound was the Scottish referendum in September. Investors and speculators are worried that political instability may halt reforms on the economic recovery, which is another thing that Mr. Cameron mentioned or hinted a couple of days ago. Moving along to Asian markets, Japan's major indexes rose after Prime Minister Shinzo Abe postponed a planned sales tax increase, called a snap election, and ordered his ministers to start preparing a stimulus package. The Nikkei 225 has almost touched a 7-year high, and the TOPIX index has almost doubled since November 2012. With investors in Japanese stocks about $1 trillion richer as policies of Abe and the Bank of Japan weakened the yen and spurred inflation. The Bank of Japan today concluded a 2-day policy meeting and kept a pledge to expand the monetary base at an annual pace of 80 trillion yen. Foreign investments for the month of October and trade balance numbers are to cause volatility from the calendar events with regards to the Japanese yen today. Moving along to commodities, S&P 500 index gained a little bit over 10 points, about 13 pips yesterday. Crude futures moved lower on Tuesday as markets bet that the OPEC oil cartel will leave outputs unchanged at an upcoming meeting despite months of steady losses due to ongoing supply, which were a little bit of a concern. The WTI 75.25 cents per barrel, now at 74.30, down by 0.95 cents. Oil near 4-year low as OPEC sees resisting calls to cut output. Crude traded near the lowest price in 4 years amid speculation that OPEC will resist production cuts sold by some of the smaller members. Iraq's biggest oil refinery at Baiji is set to restart processing in about 3 months after government troops forced Islamic State armed militants away from the facility. The EIA crude oil stock exchange are due to come out today. Overnight, gold prices rose in afternoon trading on Tuesday after an upbeat report on German economic sentiments sent the euro rising over the dollar, often a recipe for rising gold prices. Gold, 1,187.4 per troy ounce now, and 1,193 ended the session yesterday. That was all from me from today. Thank you very much for your time. Cheers, and I wish you a successful trading day. Bye-bye.